Good morning, traders. It's 8:01 a.m. Chicago time on Thursday, the 2nd of May, 2016. This is another Trader Bite. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not indicative of future results. We just got comments from ECB's Draghi. He's still speaking. For those of you who are trading treasuries, Euro FX, European products, you might want to pay attention. There are links for the actual speech online. But the main gist of what was said was that he reiterates that they're keeping rates at current or lower levels for an extended period of time. The rates are set at 0%. Says that they're likely to begin buying corporate bonds. Initial jobless claims came in at 267,000 versus 270,000. A lot of noise. 270,000, slightly better. Continuing claims came in at 2.17 million versus 2.15 expected, slightly worse. GDP for Europe was raised from 1.4 to 1.6 for 2016. We're seeing a small move in the euro. Um, so the ECB is stating that it's still fighting low inflation. Also, we have Fed's Powell says large banks need to internalize resolvability issue. No idea what that means. Other than that, we're looking at OPEC meeting. There's still a rift between Saudi Arabia and Iran. Iran does not see a point to participating in an output ceiling for crude to help prices. The OPEC countries are meeting in Vienna to come to an agreement on oil output. There's little expectation that this would actually succeed. So oil has been all over the place. It dropped right before the open. It's gapping down on the pit session. Other than that, we're looking at for today. Lost the screen with my economic data. Here it comes. For today, we're looking for ISM New York at 8:45 Central, 9:45 Eastern. No expectation. Prior's 57. At 9:30 Central, 10:30 Eastern, we're getting the EIA natural gas, expecting 85 billion. And at 10 Central, 11 Eastern, we're going to get the DOE U.S. gasoline inventories, distillate inventories, and crude oil inventories. Crude oil is expected at negative 2.5 million, distillates at negative 921,000, and gasoline at negative 350. In addition to that, again, we have Fed's Powell still speaking here. But also we have at 9 o'clock Central, we have a press conference by the president of the OPEC conference and OPEC acting secretary Secretary General in Vienna. So we're looking for comments there. If you're in crude oil, you'll want to see if you have a news feed that will cover that. And then again at 9 o'clock, we're looking for Draghi again with more comments along with Nawatny. And then at noon Central, 1 Eastern, we top the day with Fed Speaker Kaplan also releasing comments on the economy in Boston. So there's a lot of chatter here. And tomorrow we get non-farm payrolls. We had ADP employment this morning. ADP came in at 173,000 in line with expectations. But tomorrow we get unemployment and non-farm payrolls at 7:30 Central, 8:30 Eastern, and that's clearly that's going to be a market mover. So that's how things are shaping up. Let's take a look at what we got yesterday versus what we expected to get. Here's the plan pre-market on the Trader Bite. The primary expectation, given given where we were opening, given the stance of this profile in this area, the fact that we were unable to hold above this fairly sharp point of control. the expectation was that we would attempt to go higher, which looked good for a while. And if you recall, I mentioned 91 as a key price to test, 91 being the low volume node in between the two distributions on the overnight session. And for those who wonder why I don't look at a 24-hour chart, I look at a pit chart. The reason is that I incorporate whatever's needed from the overnight session into the open of the day. But once the day opens and all 500 stocks are trading in the S&P 500 in this case, or 100 stocks in the NASDAQ or 30 in the Dow or whatever, once those start to trade, and once they've tested the overnight levels, I have no use for the overnight anymore. It just creates clutter in the chart. But overall, we're looking for a test of 91, and for the market to rotate down and fill the gap with a target of 79 even, and then 74 half below that. That was the primary hypothesis, which clearly did not work out. It looked good for a while, and I did bet on it, but overall what the market did was similar to hypothesis number 2, which was an open auction on the open, test down, find a base, and then start moving up, and then rotate, as I said, balance through the day, balance in the prior day's value area. And that's exactly what we got. Let's look at what we actually saw. Here's what we saw yesterday. Let's switch to a 15-minute, keep things consistent. There it is, opening just beneath. If we look at the trigger chart, which shows us the kind of open that we have, you can see that the open was just outside of the prior day, so open auction out of range. It's an open auction because it tested up and down, leaving us with an OS that is from 83.25 to 86.75, adjusted up from, I believe it was 86. So once the opening swing was put in, the expectation is the market would walk to 91, which it did right here. Remember the 91 from the overnight session. Again, for those who did not watch yesterday's Trader Bite, and again, I'm not here to just give you answers. I'm here to help you understand the auction process. Here's the 91 right there. The 91 separates the lower distribution overnight from the upper distribution. When we have a double distribution profile, the LVN in between, or the low volume node in between, is very, very important, because once that's breached and we see that there's a bid going, then we have a clear target to go for. In this case, it was the HVN up here. So the 91 is this price, and that's the price we're looking to test first thing, and that's what we talked about as part of Hypo 1. So Hypo 1 was looking for an open auction, a push to 91. We got to 91 and a quarter, so we definitely got filled there. And then the expectation is it would drop usually to mid or so, which it did, and then to make a failed high or a failed attempt, and then become corrective and start to fall out and start to work itself down to the 79. That was supposed to be Hypo 1, and it didn't work out that way. Instead, we had this impulsive rotation up, pulled back to the mid. Again, the mid is the middle of the current high and low, this blue line. I talk about the mid a lot. Pulls back to mid. That is a classic setup. I was on the opposite side of that because I was looking for Hypo 1. I got to trade the plan. And then once it breached and then pulled back and started to go higher, the trade was wrong. From about 90.75 to about 93 is what it ended up being, or 92 half. And then, so now we switch to Hypo 2. So Hypo 2, we're going to look for a pullback either to mid or to the IB. Couldn't get mid, got the IB, rotate up and look for the next low volume node up. The next low volume node up is right up here at 98.75. The market put in a high at 99 and a quarter, pushing that target up there by 2 ticks. by 2 ticks to finish the day with a weak high, a profile that is imbalanced. The point of control is higher yesterday than the day before, showing us a little bit of strength. The point of control was not, the value area is not balanced. The market could not find a consensus here, and overall, the trend was fairly steady throughout the day. Man, I can't draw straight lines with a mouse. So you can see there's a channel here, and the market just moved the point of control from there to there to there to there to there, and it could not find those sellers. It could not find balance or could not find value, and it made this wide value area with the point of control at 97, and it's, to me, it's almost not a valid value area. I'm not going to be using this value area today. I'm not seeing consensus. I'm not seeing a Gaussian or normal distribution. So we cannot, just because the software draws a value area in gray here, does not make those levels valid. You have to look at how they were built, and that's what we call context, okay? So that's what happened yesterday. Now, the expectation based on what happened yesterday, given how we closed, given the point of control is near the high a day, the expectation is for a continuation higher, which failed. The overnight session was unable to get above 98 and a quarter, and it's trading much, much lower. We're in fact pushing the overnight low at 2090.50. So if we look at the overnight low, the overnight trade, here it is. It opens near the highs, and the expectation is it would take out the weak high and continue higher, and it did not. Instead, it pushed lower. It built this balance zone below. It attempted to get out of it, and then it's basically selling off into the open here. It throws off my hypotheses that I did last night. Very odd. A very odd way to trade here. I don't see, it's understood that the ECB comments from Draghi are driving things a little bit, but right now the market's really balancing, was balancing all night, and has tested both sides and has clearly failed to find buyers as it continued higher. It found sellers, and the sellers are now dominating this move down. So that's how things are looking. You can see that the delta is also moving lower with price, and the overall volume overnight is very light. It's 177,000 versus 237 the night before. Again, it's pretty light. So how are we shaped for today? Since we are opening below this, below the point of control, we're opening in yesterday's range. We're opening against yesterday's mid. The expectation changes for Hypo 1, which was expected to open higher. The expectation for Hypo 1 starts out as an open auction, and the expectation is we test lower, but we're likely to find our buyers, and we're likely to push to 2097 as the first target. So 2097 is the first target, and we're looking for a pullback, and we're looking for a continuation of yesterday's auction, and then eventually today a strong potential for new all-time highs. That's the expectation today. So the overall hypothesis is for a slow start and then a shift upwards. The only caveat with Hypo 1 is that we have non-farm payrolls coming in tomorrow, and it's hard to tell what the market will do, especially in the futures. It could potentially just go sideways or push lower as hedges are put on. But the market's clearly in a bull trend in the intermediate term over the last couple weeks, and the expectation is that continues unless we breach below a level down here, which is 69.5. Let me show you that level. Right here marked in red. Unless we break below here, I'm looking for new high. 69.5 breaks the upper distribution again from the lower distribution, and unless it's tested, again, I'm looking for 21.05 quarter to be taken out by at least a few ticks. So that's how things are shaping up for Hypo 1. Hypo 2 is the opposite. Hypo 2, we got an open auction, quiet open, and then an attempt higher, push to 2097, take out the overnight high potentially, and then overall Hypo 2 looks to continue the balance of yesterday, and we are stuck in the middle here. So um, the overall plan for Hypo 2 is a test higher that fails and then falling back into balance and staying within yesterday's range. That's what Hypo 2 looks like. Those are the two hypos that we have playing out for today, and overall, uh, it's the same. It's the same plan. It's hard to tell what's what and what's likely to occur. That's not our job. Is not to predict what the market will do. Our job is to trade off of what is likely to happen on a probabilistic basis, and to put our risk on the line. That takes advantage of that. So. Take your time, wait for the market. If you don't see things clearly, just wait a little bit longer um, until you see something that makes sense to you, an edge of any sort, and then you can place uh, you know, balance your profits and losses and place your trade and let the market do what it's got to do. Good luck, and I'll catch you tomorrow. Take care.